a second. Looks like it just got started. Thank you, everyone, for joining me today. Brian Wilson, September 11th, this edition of our Edge demo. Just a couple of rules to think through as we kind of walk through everything today. Feel free to hit me up in the chat line if you have any questions. I'll kind of stop the presentation every 4 or 5 minutes and see if any questions have come in. All questions are welcome. Otherwise, if you would just mute yourself during the discussion itself, that would be appreciated. So we'll go ahead and get started. I want to get started with looking at our model portfolio. There's about 50 of you right now that have joined us for the model portfolio. We greatly appreciate that. We hope that it's going well for you. Let me share some of the criteria. If others want to join, the more the merrier. We'd love for you to join. It's been a great product so far, at least in my estimation. So let me share what the criteria is and how we're doing to this point. This is the criteria itself for the model portfolio. It's looking at 5 components. It's looking for sentiment demand that's greater or equal to 8, looking for a trend that's moving higher, dollars per day of at least 100 million, short volume lower than 50%, the short volume 5-day trend is down, and the price is at least $20. The way that it works is it's trying to, it has 5 components at all times. There are times where all 5 will be replaced. It doesn't happen very often, and we try to maintain at least 2 positions at all time. When we exit, it's looking at falling demand or rising supply in the 5-day trend. So that's the exit criteria. Every day when the email is distributed, you'll get something that looks like this. It will show you what fund or what ticker to exit that day and which one to pick up. So for today, it was telling us to sell Baidu and to enter into Roblox, and then it gives us the 5 tickers that are currently in the portfolio. If we look at the performance over time, right now, portfolio is up about 37% versus the S&P 500 at about 11.5%. And this is what the performance chart looks like. So even when the market has been performing worse, it's held in there during those rough stretches. We did have a period recently where we lost a little bit of ground, but we've been regaining that during the last few days. I did want to share a couple of things for those that are using this portfolio, maybe a couple of things to think about as you use it. And let me show you what this looks like. So here is the current portfolio. So the 5 names that we had as of yesterday, adding in Roblox today. And there's different ways that you can approach this. You can quite literally just buy and sell the names and don't do anything until you get that email that tells you, hey, this is, what we're exiting. This is what we're adding to today. Another way that you can approach it is you can add a little bit of active investor management to it, if you will. It's a quantitative model. So let's take a firm yesterday as an example. It started to lose ground during the course of the day. The broad market was generally doing better. Oracle was fueling advances for decent parts of the market. A firm started to weaken a little bit. This was just my approach with that name. I decided to just start cutting my position a little bit. I held on to half of my position going into today, but my approach was like, hey, it's weakening. I don't know why it is. I'll hold some of it, but I'm going to cut back some of that position. That's just an example of one way that you can approach perhaps a name doing a little bit poorer Oh, and you can reverse that. Let's say that, as an example, app loving is up 6 days in a row. Well, you know that it's not going to advance forever. Would it be time to perhaps trim that a little bit? Well, if you want to actively approach that, that might be an approach that you might want to take. One other example, this is more of a longer term portfolio. Let's say that you look at Baidu and you're like, man, I love this name in the long term, but the model is telling us to get rid of it. Well, you don't have to. If you like the setup, and in fact, if you look at Baidu trading right now, it's been up and away for the last really 6 months. You look at it today, it's doing great. 5 day, it's up. 6 month, it's up. You're like, wow, I love that name. Well, maybe you take part of your profits and maybe you hold on to it and see what happens. Just recognize that that's going to take a little bit more work on your part. But if you're willing to do that, it is a quantitative model. My point is, if you want to, you can add a little bit of active investor adjustments, as you see fit. Does that make sense to everyone? Are there any questions about that? We good on that topic? So once again, happy to have you join us with the model portfolio. It is doing really well, so far this year. Tim has two other portfolios that he toyed with the idea of maybe starting before he took off on his trip, and then I think he realized, like, that's probably not a good idea. But he's got those in the background, and I think he might set those up as he comes back from vacation. So stay tuned on that topic. It's other options if you want to get into other portfolios as well. So that's the model portfolio. I wanted to share with you what's been happening recently with NVIDIA trading, and I brought this up as a topic yesterday. So this is what NVIDIA looks like during the last 6 months. It's been pretty predictable in terms of sentiment and what happens with its pricing. So you can see that when demand falters, and once again, the green is demand, that's our algorithm sentiment, which is our algorithm for demand. When demand falters, well, share price falters. Demand moves lower, share price moves lower. And especially when it goes below neutral. And you can see it doesn't go below neutral very, very often. And this was an interesting setup, both coming into their earnings print and coming out the other side. Let me bring this back to a 3 month look. I think I can show you where it started to slide. It slid below neutral right about options expirations, and I think they reported on the 27th, if I remember correctly. But it was very interesting. We talk about expirations. It was a bit of an inflection point, where they really started to slide right after August expirations concluded. I did want to share with you, so that's what's happening from a sentiment perspective. Let's go take a peek for a second what's happening in terms of the actual data. And this is Modern IR data. It's our sister company. And what I want to share with you is what was happening behind the scenes as share price started to slide a little bit. Who was bringing, some of that pricing pressure? Well, if we look at the four behaviors in the marketplace, you can see the norms for the four behaviors, and you can see, what have they been doing during the last month? What have they been doing the last 5 days? Well, here's where NVIDIA normally resides, between about 18 to 20% on the passive investment side. During the last month, that was up to 21%. So in other words, as share price started to come under a little bit of pricing pressure, which behavior was contributing to that? Well, passive money. It was likely ETF plan sponsors that were washing out some capital gains. But look at what's happened during the last 5 days. This was a fascinating read to me when I pulled it up on Thursday. big blue pattern. What that represents, it's active investors. So active investors, I think, detected an opportunity. They aggressively swooped in and they bought the pricing dip. And you can see that, share price is now, moved higher. Of course, we had lights out earnings from Oracle yesterday, but that was just fascinating to me to watch active investors really step in a very aggressive manner. 15%, that's a big number for active investors. Here's the norms from an active investor perspective. Most companies are between about 9.5 to 10%. So just wanted to share that with you, that at least from an active investor perspective, they think the damage might be over for NVIDIA, and they're communicating that by their buying activity. Let me go back and see if we have any chats coming in. I don't think we have. All right, good to go there. We good with everyone so far? Everything going okay? Let me switch over. I'll take you back to a Modern IR report. It's from a broad market perspective. And I mentioned this actually this morning. So Modern IR report, looking at the S&P 500, what are some of the recent trends there? Well, you can see right away that we're getting some rather, let's call it, I'll call it aggressive, but we haven't we have an uptick in terms of what investors are doing, both for the S&P 500 and for the Russell 3000, slanted a little bit more on the passive investment side for the Russell. So this represents week over week activity. In other words, investors, both active and passive, are presently doing more right now. From a trading patterns perspective, and when you see these patterns, if it's above the zero axis, that reflects greater influence from those behaviors, and that's what this is communicating to us, that greater influence. Look at the trends over time. Active money 10-1, 200-day levels up. Passive money, big surge from passive investors. You've seen me mention that a couple of times in the last couple of weeks, that we continue to have these ETF flows. They're much higher than norms, and that continues to lift the market. What's happening for the Russell 3000? Same general trends, just not as pronounced. You can see on the passive investment side, up by about 120 basis points, much more so for the S&P 500. When we make the connection there, well, money, ETF funds, we're getting more money flowing to the bigger players. We kind of knew that inherently, but we see it playing out in the data as well. So we continue to get the trends continue to be very strong from a broad market perspective, and this is investor driven right now, both for the S&P 500 and for the Russell 3000, more so on the S&P 500 side. I'm not sure if I mentioned this with today's note or not. If I didn't mention it, I was thinking about mentioning it. And we'll kind of mention this 2 times, but I'll take a crack at it right now, and we'll cover it again when we look at our what's ahead section. I did want to mention for a moment some of the recent short volume trends. And you've heard this discussion before, but it's important to kind of remind ourselves what's happening. So when the market weakened back in April, we had a tremendous demand surge. That's the sentiment rising for the broad market. As sentiment rose, shares were borrowed to facilitate that buying. So that's what short volume represents. It represents borrowed shares in the marketplace. This peak right there was one of the highest levels that we have ever recorded. So short volumes really increased exponentially at that point. Notice we're not getting those same peaks anymore, but notice what's happening with these short volume surges. So short volume increases. What's happening in the broad market? Broad market's moving higher. So, we're getting that demand in the marketplace. Shares need to be borrowed to facilitate the demand. What happens? This is where it gets interesting and kind of what I'm thinking about for the next few days. What happens when shorts get covered? Well, when shorts get covered, then the broad market advances kind of tail off a little bit. What's part of the reason for that? Well, think about the market participants who are short shares. Where would they rather cover? They would rather cover at lower prices. So you see that short covering being done at lower prices. We get a surge in short volume. The broad market advances. What happens when shorts get covered? The broad market rally kind of tails off again. How much higher does this short volume surge go? I'm not sure. But just think about the fact that there's a little bit of a headwind that's developing right now. And depending on when those shorts start to get covered, we could start to see this broad market rally, start to peter off just a little bit. Joe has a question on Nvidia that I showed earlier. Is that a bullish read on Nvidia with the active investors stepping in? To me, Joe, it is. I think that the sentiment read is going to catch up here today, tomorrow, something like that. That it'll stop declining and start advancing again. Very clear signal, from active investors for Nvidia that they think the downside is over. Now, of course, they could be wrong. There's a reason why passive investors gain at the expense of active investors. Active investors can sometimes have poor timing. As a general rule, they do a worse job than passive money does. But I would say that yes, Joe, I would agree. That's a bullish read on Nvidia. I'll take you back to what we're seeing right now, or just daily trading itself. And I cover this pretty much every time that I do these. I think it's an important concept to just remind ourselves of. Momentum portfolio, every day you get the choices that come in. It gives you an entry low and an entry high. And then it gives you the probabilities with that. I sort them by probabilities, and today's been a busy day. I haven't even dropped today's in there, but this was what we had yesterday. So I'll look at those, during the course of the day. Typically, I'm going to be looking at purchasing names towards the day's end, 10 to 15 minutes, left in a given day. The way that I'm approaching some of these names is I'm looking for strength at the end of the day. I'm looking for shares to close above midpoint pricing. So if things have gotten away from me, well, I'm not chasing them. I'm not going to chase MU. I'm not going to chase tech. I'll take a look. We're already buying Roblox for the model portfolio, but maybe WDC. What's going on with WDC? I'll take a look at that at day's end if I can get the ticker right. Is it above the midpoint? Is it below? Uncertain right now. I might take a look at it a little bit later in the trading day, but that's the way that I'm approaching it. And sometimes I'll take it a step further. You don't have to do this. Recognize that the math is the math. This gives you the probabilities during the last, I believe it's 50 days, if I remember correct. It gives us the actual probabilities. You don't have to do this exercise that I'm doing, but it just helps me to pick out some of the names that are showing or exhibiting a little bit greater strength. So I'll look at it on a 1-day basis. Are we closing above midpoint? How's it doing on a 5-day basis? It's showing a lot of strength. How's it doing on a 1-month basis? Once again, showing a lot of strength. So that's one way that you can approach some of the daily trading ideas. But once again, recognize you don't have to go to that bother, because the entry lows and entry highs and the actual percentages do that for you. Am I missing anything else? I don't think I am. Please holler if you guys do have any questions. I'm actually going to go to my last point here today, and then we can pick up any last questions that you guys might have. Just as a reminder, and most of you guys are aware of this, go to Market Structure Edge and go to Resources and the Expirations calendar. Just think of it as a planning calendar, and you can look at the events that are coming up. So as we move into next week, we have the green, which is VIX or volatility expirations. We have the FOMC policy update. That's next Wednesday. Options expirations right here, Thursday and Friday. And then finally that green circle, which is S&P quarterly rebalances. So we try to cover those events that we call context in the market. We try to cover those in the market desk notes, but you can also look ahead and try to pick up some of those important dates yourself. So looking ahead to next week, then it gets very busy. All eyes are on the Fed right now. Most of the commentary that I'm reading is baking in a 25 basis point cut. Could it be larger? Could it be a 50 basis point cut? Not sure, but that's something that everyone's kind of thinking about at this particular time. In terms of broad market activity, you can see broad market sentiment right now is at 5.2, roughly right around neutral. Let me take you behind the scenes for a moment and show you what the daily read is. So the daily read is, it looks like it's bottoming right around 5, but I'm not sure yet. So we might be forming a bottom right around neutral. But as I mentioned earlier, let's be aware of what's happening for that short volume trend. You can see short volume is moving up and away. It's not back to where we were in April and May, but that's a very rapid rise in a short amount of time. And once again, similar to what was occurring in August trading and late July, when shorts do start to get covered, that usually kind of caps out the rally a little bit. So as we look ahead, let's recognize that there's a little bit of a headwind from a broad market perspective, higher short volumes. We have a reason why they're moving higher. It's facilitating some of this demand, but I'll also recognize that it is a headwind. So that's really my main points as we look ahead. Let's watch sentiment. Does it stay above neutral or does it fall below neutral? I don't know yet. I think it bottoms here right around the neutral level, but I'm not sure. And recognize that there is a headwind developing from a short volume perspective. Guys, that is it for me today. Did I miss anything? Can I help you guys out with any questions, anything that you perhaps don't understand, or anything that I didn't cover clearly? Just as a reminder, you can, please send an email at any point in time to either myself or Tim. We are available for those emails. We love the interaction. Tim will be back in the office on Monday morning, so he'll be back with us on the demos next week. Any last minute questions? I either confused you totally or or hopefully was somewhat clear. One item coming in from Joey. Let's see if there's anything there. Thank you, Joe. I appreciate that. So I appreciate you guys. I enjoy the interaction. It's a blessing to be with you guys. So just wish you a wonderful Thursday. And with that, we'll end the meeting. And yeah, send me an email if you guys need anything. Take care.